go back and look at the numbers of small business loans that are out there prior to the what we call the Great Recession of 8, 9, 10. So if you look at '07 levels of funding to small businesses, it's still not at that level even today in 2023. So we haven't, and the reason for this is, well, there's lots of reasons for it, but when I'm old, so when I was a young banker, my guys and my gals would get excited about putting a $3 million loan on. $3 million working capital was fantastic. $3 million working capital loan I was excited about as the CEO. Now it's, these guys and gals don't get out of bed unless it's 10 million or 15 million. So small biz just doesn't have the critical mass to attract, in part because the system requires so much more paperwork than it did back in the day, right? So you've got the unintended consequences of government. Again, you want to be careful not to put everything into this large bucket, but when we require banks to be more stringent, because the government is guaranteeing the deposits, we say to the banks, don't lose money, because if you do, we're not going to be happy because you're part of a deposit guarantee program. We're going to have to write the check. So don't lose money. Make sure you're not making bad loans. Part of the problem is small business fails more than large businesses do. And sadly, in a majority-minority world, it's still kind of screwed up. Majority doesn't take care of minority as well as it should, and the minority businesses have a higher failure rate. Women-owned businesses have a higher failure rate, and it's because of societal difficulty that we need to figure out a way to solve that. But my view on this is it's going to be a real hard thing to solve. So if you want to stop bias in the financial system, you can do all sorts of training, but the system, it's stacked against us because we're told not to lose money as bankers. Fine. The only way you're going to solve bias, eliminate bias, or to a degree perceive prejudice in the financial system is to stop the process and the need to risk underwrite. When somebody gets paid early, there's no risk to it. So there's no more excuse for, a small business is going to fail sooner, or a black-owned business is going to fail, or a brown-owned business, or a women-owned business. It's all bullshit and not necessary if we eliminate the risk underwriting of that business and just get them paid sooner first. Get them that money that they need in a marketplace without credit risk. That's when you can redesign and blow up the system so you eliminate the bias and the excuse of risk underwriting as a reason for not making loans to small business or black-owned business or brown-owned business. So we built a marketplace where we have large buyers and all their myriad suppliers online digitally. We're taking, today, 50 million invoices every night for the large buyers on the platform. They represent about $3 trillion of accounts payable. And we're pushing that to all their suppliers all around the world. And then now the suppliers can see what they're going to get paid by the large buyer, which is great. But even greater is those suppliers can use the platform to give a small discount to get paid sooner, eliminating the need to go to the bank or eliminating the need to risk underwrite accounts receivable. Why would you risk underwrite accounts receivable? Why would you borrow when you can be paid early instead at a price that you name?